So, what are the different types of life insurance? Well, there's actually quite a bit of different options. We have term insurance. We also have something called return of premium, whole life, index universal life, and just universal life. There's also some other options as well that you can kind of work with, but those are the main five. The main three are term, whole life, and index universal life. So, what are those options? So, term is going to be set for a particular limit. So, you can do 20, 30, 40 years. And then at the end of that 20, 30, 40 years, the policy ends. You kind of shake hands with the life insurance company and you go your separate ways. But if you were ever to renew that, the price is going to be a lot higher because they're going to be looking at it from the point of view that you just outlived this policy. And if we're going to reinsure you, we're going to have to jack up that rate. So sometimes it can be good, especially if you're pairing it with like a mortgage insurance. That way you can make sure if you do pass away, you can pay off your house or while your kids are getting through college. And then if you wanted something that lasted your whole life, hence the name whole life insurance, you can do something along those lines where it will last your entirety of life. Now, this also builds something known as cash value. So, cash value is pretty awesome because it's basically based upon indexing in most cases. And ultimately, what happens is your money is building while the policy is sitting there and you're paying premiums into it. So, for instance, if you have cash value, it could potentially grow quite a bit over 10, 15, 20 years, and you could actually take loans against that policy for whatever you would like. So, one example I always give is my grandparents. They actually took a loan against their life insurance policy and bought a car. Now, they were older when they did this. I always suggest if you're going to take a loan, try and do it with something that is going to also build you potentially more growth in assets. Maybe like if you're doing a rental property or doing some type of investment that is going to give you back money, because ideally you want to try and return that money from the cash value back into the policy to restore that cash value so it continues to grow over time. So if you need to take out another loan later on down the line, you could definitely do that. Now, if you really want to explode with cash value, I always suggest the index universal life policy. The reasoning why this can be a little bit greater than whole life is because whole life is basically a fixed amount. So you can maybe be getting 5, 6, 7%. Now that will earn for the entirety of your life, which is wonderful. But there's set numbers and there's set milestones of how much money you know you're going to make in whole life. Where index universal life is a little bit different. It doesn't work in the market, but it is based off of the market. So, for instance, if the market is doing really well, you can have allocations such as like the S&P 500 or Vanguard or some other options out there where you can basically have your money working off of the S&P. So when the S&P is doing really well, you could potentially have growth of 8, 9, 10, 12%, sometimes even higher than that based upon what the allocations are offered by the life insurance company. And then if the market is going down, which is always a concern for people, there's typically a 0% floor. So if the market's going down 20, 30%, you are not going to be going down with the market. And if you are aware as the market is going to be going down or you have some type of idea or feeling that it's going to be going down, then you can always set those allocations to a fixed amount, kind of like whole life, where you could still be getting 5, 6%. So there's a lot of upside with Index Universal Life. And the ability with Index Universal Life is that we're not typically focusing on the face amount of the life insurance policy. We're typically looking at the least amount of face amount that we can get, because then that way our money and the policy that we're putting in is actually being put to work in indexing. So you're going to build more cash value. Whereas in whole life, typically what's happening is when you are paying for the whole life policy, you're trying to get a little bit larger face amount, but that money you're putting into the policy is going to the cost of insurance rather than building cash value. So the money that you have into the policy isn't quite working for you quite as much. Therefore, that's why sometimes whole life does not grow as quickly as index universal life. So just wanted to share that information with you. It's always good to know about the different options of life insurance. I can always go over this with you. If you always if you want to end up booking an appointment with me, we can definitely do that, and I can get you some quotes. Just comment life in the comment section, and then I will send you some information on what I would need in order to get some pricing for you. So if you have any questions at all, you can text me, DM me, email me. I'm always here and super excited to help anybody who's looking at the journey of life insurance to protect their family. All right, well, you guys have a good day, and if you need anything at all, you know where to find me, and you have a great afternoon or morning or day.